Hey guys, Shauna the Tax Goddess here, and today we are talking about charity. Now, there are multiple different ways to do charity, okay? Most of us as individuals, we know that we can give cash, we can give goods, right? Clothes, household items, whatever it is. But when we're talking big dollar amounts of charity, so typically over 25, 50, 100, 200, $1 million worth of charity, there are some, I'm going to call them big boy strategies for donating cash or stocks or assets, okay? And most of these strategies, while they still generally work the same way, you're giving something away to get a tax benefit, some of these strategies actually allow you to give money away and keep money for your heirs or create more wealth than what you put in. So you might put in $1 million, but you might get out 1.2. So there are some really cool tax strategy things that we can do, which of course is why you're here on the Tax Goddess channel. So I wanted to cover a couple of them that are pretty common and then a couple of them that aren't so much. So let's talk about, for the common ones, let's talk about donor advised funds. Now, for many people, maybe they have an inheritance or they had a really big year, they sold their business, whatever it is. They want to donate money to charity, but they don't know which charity yet, right? They haven't had time to do the research. Maybe it's December 30th, you sold your business and you know you want to do charity, but you're not sure which charity yet. A donor advised fund will allow you to put the money into a donor advised fund, a DAF, DAF. And once you figure out which charity, you've done your research, you figure out that you like this charity over that charity, you can then allocate that money in the future, but you get the tax deduction now, which can be super important, of course, for year-end tax planning. Now, the other one that I commonly see is for those of you that are a little bit older and you have something called RMD, required minimum distributions. Required minimum distributions can, which is pretty cool, can bypass your tax return because normally you'd have to pay tax. And then if you're going to take that money and donate to charity, you pay tax and then you get a tax deduction. We don't really want that. RMDs can actually bypass your personal tax return and be given directly to charity. So if you have retirement funds that are coming to you out of a 401k or an IRA, those are the big ones that cause RMDs, you may want to consider donating them directly to charity so they never hit your tax return. Cool little tweak to the tax return for tax strategy. Now, if you're looking to do something much, much bigger, right? So let's say we're talking about a $2 million, a $5 million, a $10 million charitable contribution. We have seen them, I have seen them as low as about 500,000, but setting up a CRT or a CLAT, CLUT, CRUT, something C, something T, okay? C something T typically stands for charitable, some sort of specialty trust. And one of the biggest benefits of the CRTs, the CLATs, the CLUTs, the CRUTs, all the different C something Ts, is that these kinds of trusts, in some cases, if they're done right, you can actually put money in, you get the immediate tax deduction, the charity gets the benefit, and on top of all of that, your heirs can actually get money back when you pass away. So you're effectively double dipping your money, and it helps you get around some of the estate taxes, all legally, all above board. So if you are a charitable person and you're really looking for maybe some larger ways to do charity, you can also look, the fourth one I want to cover is your state charities. State charities, depending on which state you're in. So I'm in Arizona. In Arizona, if I give $1 to a charity, I actually get $1 off my tax return. And I can do that as an individual or I can do that as a business. So if I want to do $1 million charity to, specific charities, but if I want to do $1 million donation to a specific charity that meets these qualifications, I can actually get $1 million credit off of my tax return. So there's about 50 different ways to do charity, and I always want to make sure that you know that there's options. So today we covered the donor advised fund, using your required minimum distributions to pay over you, right, to skip over your tax return and give that cash directly to the charities without you paying tax on it, which is pretty cool. All of the different kinds of trusts. So it could be CRAT, CLAT, CRUT, CLUT, there's a million different kinds of C something something T for trusts, and each one has their own special way of doing it and special regulations depending on the best situation for you. And of course, if you live in an awesome state, we live in Arizona, that you may even have specific charitable contributions that you can make to specific charities and get your taxes dollar for dollar off on your tax return. So some pretty cool things that you can do. And of course, if you are charitable minded, Tax Goddess, we have our own charity programs. We have an educational program for students here in Arizona, underprivileged students. And I'm a big fan, if you can't tell from the dog beds in the background, big fan of my local animal shelters and that kind of thing. So if you are looking to work with somebody who is also charitable minded and you've got some charity donations you want to make, let's create some plans. Let's do tax planning and see how we get you the best benefit for the dollars that you're going to spend. So if you have any questions, or if you're looking for a tax strategy and a team that specializes in keeping that money in your pocket, reach out. That's what we do here at Tax Goddess. So have a great day, everyone. We'll talk to you soon. Bye.